Hey, what's up, guys? Jesse Morrison here, and I just wanted to bring to you a market update for October. The San Diego housing market data just came out a couple days ago on the 1st, which was over the weekend. But I'm going to go ahead and share that with you in this video and explain to you, what it's revealing to us and how it can forecast the next 90 days. So we're going to dive into seasonal trends, and this is going to reveal to us, why we are experiencing what we're experiencing right now and what we should expect for the next for fall and winter months coming up. Then we're going to look into more of a macro level general trends, basic economics like supply and demand, and what that's telling us about where the trend should continue to move or deviate from. And not just supply and demand, but we're going to look at what affects supply and demand and where are we at in relation to history. Right? What can we expect moving forward? These are the kinds of statistics that can build confidence, but also help us be wise in our decision making when it comes to buying or selling our home. Hey guys, my name is Jesse Morrison, and we offer a proven and repeatable home sale process backed by client results that adds up to 18% more money to your bottom line than traditional real estate agents. So if you'd like to protect your family and your finances through the home sale process over the coming months, please just visit my link in the description below and apply now. So let's dive into seasonal trends. The first graph we're going to look at is days on market. I want to bring your eyes down here to the definition and show you. Look, it says this graph indicates how long it typically takes to sell a detached house in San Diego. All right. And just so you know how this graph is outlined, the blue line, the graph itself, is the measurement of how long it takes to sell a house. Over here are the number of days, and this is over time, okay? So the green arrows represent the trend that I've discovered that I want you guys to pay attention, and that represents from January to June. Every green arrow is the season of January to June. January to June, January to June. And these yellow boxes, they represent the next 90 days. So the time frame from October, November, and December of that given year. And what we're gonna do is we're gonna look at, what does history show us so that we can forecast, what the next 90 days should look like from here. So what I wanna point out from this graph is, look, from January to June, homes typically sell faster and faster as January approaches June. And the opposite holds true, right? So as June approaches the following January, it takes longer and longer to sell a house. And this is key to realize, because without this data, you might be prone to think, homes are sitting on the market longer, the market's crashing, all that, with all the news that's going out there, it'd be easy to fall for that. But look, guys, this is normal. We just passed June, and as we're approaching the next January, things are gonna sit longer. Look, this is in the last 5 years when the market's been doing nothing but going up. This is just the trend of what happens during this time of the year. So look, guys, as of the last month's data that came out, homes are sitting for about 22 days before they get an acceptable offer. And you should expect, as we approach January, that it's gonna take longer and longer to sell your house. The next graph I wanna talk about is the sale to list price ratio. And again, let's look at the bottom here. It says this indicates, what buyers are willing to spend with relationship to listing price. Basically, it's going to measure how aggressive buyers are being. All right, so when you're looking at this graph, 100% right here, this line, that is the list price, okay? So if somebody's asking, say, $1 million for their house, if they get more than $1 million, then that means the house will sell above this line. And if they get less than $1 million, their asking price, then the graph will show below this line, okay? Now look, again, I want to point out that in January to June, buyers get more aggressive, right? They're willing to pay more for a house than from June to the following January. As June approaches January, they are willing to pay less for a home compared to the list price. Now if we move over here to this side of the graph, on this side of the graph, you can see that in 2021 and 2022, we've had these huge spikes, right? Where it's normally homes will normally sell between maybe 100% to 97% in this range. In 21 and 2022, buyers got super aggressive, pushing up here in April of this year to just over 106% of the asking price. And it may look, by looking at this graph, that, you know, the housing market has fallen off a cliff. But look, guys, buyers are just returning to the norm, right? It's becoming more of a, hey, let's actually have negotiations versus giving an arm and a leg just to win a house. So what does this graph tell us? I'm going to draw your attention to the bottom of the screen here. It says we are in the middle of the cycle where buyers become less aggressive. In the months of October to December, we can expect to see buyers be less to least aggressive. Again, that's what's happening during this time of year. So if you're out there shopping for a house, you can anticipate getting a better price right now. It's awesome. I'm seeing, you know, story after story after story about, you know, winning deals and negotiating, you know, closing costs into a transaction, or just being able to secure a home. When back in, you know, just a few short months ago, when there was so much competition out there, it was hard to win a deal, and buyers were pushed to the sidelines. But right now is a unique opportunity with less competition out there and less affordability, where you can actually get into a house, secure a deal, and actually negotiate a really good price. And on the home seller side of things, you just need to be aware of what's going on, so you're not left 2 steps behind. But guys, look, buyers are still buying homes and sellers are still selling homes. So you don't need to be too fearful. You just gotta have proper expectations. So this next graph talks about what do values do during this time of the year. Now, if you look, we've been in an upward trend, right, over the last 5 years. You know, we've been going up. The way home prices go in San Diego, when the trend is moving upward, is they don't go straight up, right? They go like a staircase. And you can see from January to June, again, that's what these green lines are, these green arrows. Prices take that step up the stair, and then from June to the next January, either you take the things level out, or they even take a slight decline, and then they move up the next stair level, and then they level out or take the next decline. You can even see here when prices were going up so steep, they still peaked in June, and then they leveled out for the rest of the year come the next January. So look, we peaked here. We should expect things to level out or take a slight decline, just like we did in the previous years. One thing that was super encouraging to me when I was looking at the numbers for this month was this tick up in the median sales price. So we were at $1 million median sales price, you know, earlier this year. We peaked out at $1 million, and we've been doing nothing but falling down ever since. I was anticipating the numbers to continue to fall for September, but they actually moved up. So the median price point went down to $900,000 last month, and then they picked back up to $915 most recently. Okay, so now we're going to move on to the general market trends, and we're going to talk about supply and demand. Now, if you haven't heard me explain to you how we measure supply and demand in real estate, I'll just go ahead and do it right now. Look, we measure supply and demand based off of months worth of inventory. So if there's 100 homes for sale on the market today, and on average 25 houses sell every single month, then we would say that there is a 4-month supply of homes. In other words, it would take 4 months to deplete that 100 home inventory down to 0. What this graph is showing us is how many months worth of inventory is currently on the market. And this is spanning from, look guys, it's spanning from 2005 to current. All right, so every time there is more than 6 months of supply, we enter into a buyer's market, right? And when supply is below 6 months, we are in a seller's market. All right, currently right here, we are showing that we are at 1.7 months worth of inventory, which is still an extreme seller's market. So even though it doesn't feel like we're in a seller's market because homes are sitting on the market for a little bit longer and prices are starting to come down, remember what we just said. That's based off that's the normal cyclical trend of what happens throughout the year, and we got to expect that continuing to be the case over the next 90 days. But until, you know, inventory peaks up above 6 months, we are still technically in a seller's market. The next graph, though, is going to show you what home prices do based off of inventory. Okay, so check this out. Values related to inventory. I kept the color scheme the same. Okay, and look, this is the same time frame going way back. And what I did is I said every time inventory So every time inventory went below 6 months in green, I highlighted that time of the year in green here. And every time inventory peaked above 6 months in red, I highlighted that time of that year, that time of history in red, okay? So when inventory entered into a buyer's market, we're in green. When inventory is in a seller's market, we're in red, all right? And this is what values do based off of inventory. You can see that when inventory is below 6 months, prices do nothing but go up. But what affects inventory? Like how, at what point, and what is gonna cause the inventory to go up into this buyer market range? Well, a home is worth what somebody's both willing and able to pay for it, right? So people might be willing to pay $1 million for a house, but if they can't afford to pay it, if they're not able to pay for it, then the house is going to sit on the market. And as more and more houses sit on the market, then the inventory will grow, and that's what's going to push inventory up beyond 6 months. So let's check out this graph here. This graph talks about affordability, and this is telling you here it says right here. This measures the percentage of households that can afford to purchase a medium-priced single-family home in California. The index is considered the most fundamental measure of housing well-being for home buyers in the state. So this graph came from, this is the Affordability Index, and it came from the California Association of Realtors. But look, the U.S. affordability is at 38%, which basically says 38% of the U.S. population can afford to buy a home in today's market. In California, we're only at 16%. So only 16% of California residents can actually afford to purchase a home based off of today's current mortgage rates, the average household income, today's median home price. All that stuff is factored into this number. But I want to draw your eyes over to what was going on in 2007 and where affordability was during that time. And you can see that nationally, homes are less affordable now than they were back in the crash of 2008. So in California, we're pretty unaffordable, right? 16% of the population to be able to buy a home is not very much. All right, we want to see a healthy level for San Diego is somewhere between like 25 to 30% of San Diegans can afford to buy a home. So look, guys, what this is telling us is right now, over the next 9 days, in the season that we're in, fall to winter season of 2022, we are right in line with expectations that should be happening right now, right? Prices should be, declining or, leveling out. Homes should be sitting on the market longer. This is natural, right? And come January, we might see things go right back on its normal trajectory and start going up as, elections are going to be passed. And hopefully we're going to start seeing some relief with the war. And COVID seems to be, becoming something that is in the rearview mirror. And hopefully it will continue to get more and more that way. And hopefully we'll get to the point where inflation will start, we'll start seeing data that shows that we have gotten inflation under control, and we're going to start pivoting on their stance of raising rates and start coming down, or who knows, or who knows really what the future holds. But as of right now, over the next 90 days, this is normal. We are right in line with what we should see. And guys, if you're looking at selling a house, take advantage of this market, right? Sell now while you can, because there's still buyers out there and there's very little inventory. We're still in a seller's market. And if you're buying a house, guys, take advantage of this opportunity. Just a couple months ago, you're competing with 100 other buyers on one property. And so you had no room to negotiate, right? You had to just do whatever it took to win a deal. And right now, you can get closing costs paid for. We can negotiate the price down a little bit. The sellers are more willing to work with us on price and terms. So let's do that. And you can lock in at today's rates. We don't know what the future holds, right? If rates continue to go up, then you may be priced out of the market again and having to wait. But if they come down, then you can refinance into a cheaper loan at no cost, and I can help you do that as well. Again, guys, my name is Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by hundreds of client results. adding up to 18% more money to your bottom line than traditional real estate agents. So if you want to protect your family and your finances through the home sale process over the coming months, please just visit the link in the description below and apply now. I look forward to helping you.